Live from Tokyo, this is Insight with me, Sherian, where we dive deeper into the stories that matter with crucial context and analysis. Asian stocks decline as investors look ahead to the release of the Fed's preferred inflation gauge. Brandywine Global will be giving us their outlook on how the Fed's hawkish pivot could impact Asia and emerging markets. And in an exclusive interview, the Philippine Central Bank governor tells us he's open to a rate cut in the BSP's first policy meeting next year. China's one-year bond yield slips to 1% for the first time since 2009 as traders ramped up bets on monetary easing. We'll talk to Societe Generale about why they see the need for more forceful policy action from Beijing. Plus, we speak exclusively with biotech firm Ichnos Glenmark Innovation after their blood cancer drug shows optimistic results during trials. We'll also ask how they're viewing the competition from Chinese bio companies. Take a look at how Asian assets are trading at the moment. We are seeing MSCI Asian stocks being led lower by financials and tech companies, although real estate and communication services are pointing to the upside. Of course, we had also Japan's key inflation gauge today strengthening for the first time in 3 months, but that pressure on the Japanese yen has continued, given, of course, that BOJ Governor Ueda has cast doubt on a potential rate hike even in January. Right now, still pulling back a little bit from that weakness below that 157 level against the U.S. dollar, given that we also heard from the finance minister saying that they're gravely concerned about the FX moves. We're also watching, of course, the PCE index coming out from the Fed very shortly today, and that, of course, will give us an indication of where the U.S. goes from here. Take a look at how futures are trading at the moment, because we have reversed some of those earlier gains as the Republican-led House rejected a temporary funding plan backed by President-elect Trump, which would have suspended the debt ceiling for 2 years. So you're seeing the downside in the future space right now. Let's discuss where U.S. lawmakers go from here and bring in Bloomberg News desk editor Jill Deasy's. Jill, so what is next now that this stopgap funding bill has failed?
Well, Sherry, that's incredibly unclear at this point, actually. We've got 24 hours before the U.S. government shuts down. This is a position that just a few days ago was just kind of unthinkable. I mean, at this point, it really did seem like, earlier this week there was, a bipartisan effort that looked like it was fairly ready to pass. And then obviously Donald Trump and Elon Musk got involved, tried to make some changes here to the legislation that was in play. And what we just saw was that get voted down pretty, assertively there. So at this point, there's a few things that could ultimately happen. So House Speaker Mike Johnson, if he wants to continue with this Trump and Elon Musk-backed bill, he can kind of bring that up, to the Rules Committee, maybe bring that back for a vote. But it's kind of difficult to see that being successful if, that did actually just fail right now. So it is possible for him to go back to the drawing board, try to get something done over the next 24 hours before the government actually shuts down. But again, it's very unclear whether or not they're actually going to make that happen before this deadline at midnight U.S. time tomorrow.
The Democratic leader Hakeem Jeffries dismissed the plan as laughable. So what are the biggest sticking points?
Yeah, there's a few things here that are kind of kicking around that ultimately, both sides are really looking at here. So first of all, a big part of this from, the Republican side and also a big part of what had Elon Musk kind of backing this version is, the original Plan A, more bipartisan effort. It was about 1,500 pages long. It included a lot of smaller provisions for different types of funding and everything like that. A little bit more on the technical side. Elon Musk spent, a large portion of the day kind of railing against some of that as being, sort of signs of government, inefficiencies. He's kind of coming in the new Trump administration as somebody that's supposed to be looking at a lot of those inefficiencies. So he was backing a much shorter bill, 116 pages versus the original's 1,500 pages. Donald Trump, though, kind of got involved here. And ultimately, Donald Trump is taking a tack that might be a bit difficult for a lot of Republicans, which is he ultimately wants to abolish the debt limit entirely. But a big portion of this bill was kind of suspending that limit, which, may help help him politically during his first couple of years in office and kind of avoid, some of that debt limit talk. That's kind of, again, an uncomfortable position for Republicans and actually leaves Democrats in this position of, sort of like fighting back against that, which is, interesting to see given that Democrats have largely been, more in favor of raising the debt limit or ultimately suspending it and stuff. So that's become a bit of a sticking point, and I think why you saw 38 Republicans, vote down this bill that had just come together. So again, it's a little unclear whether that continues to be something that Donald Trump wants to start campaigning for in the morning, or whether they kind of rearrange some things just to get something over the line that creates a stopgap through March. But yeah, creates a really interesting political situation here.
Bloomberg desk editor Jill Deasy's, and that interesting political situation, of course, could also bleed through the longer outlook for the economy and what the Fed does from here, right? Let's bring in Carol Lye, portfolio manager and senior research analyst at Brandywine Global. Carol, great to have you with us. I mean, usually these government shutdown infighting in Washington, we're so used to them that there isn't necessarily a long-term market implication. But just the fact that we're in such a tricky position for the Fed moving forward, what will you be focusing on at this point?
Right. I think when we talk about the shutdown, first off, the last time we had a shutdown was actually again in December, right? In 2018, it lasted like 24 days. Similar, disagreements over funding. Back then, I think, 10-year yields did actually drop about 35 basis points. Now, obviously, then was a bit different from now. Then was that back in 2018, there was, the global economy was a bit weaker. But now at this period of time, it looks as if like the global economy next year could have a little bit of an upward momentum based on based on fundamentals, underlying fundamentals of the global economy. But of course, if there is a global shutdown or a U.S. government shutdown, there will be worries or concerns over the growth impact on the U.S. One can work out to about 15 bips per quarter on the growth impact. So yes, bond yields from here can actually fall due to the concerns over the government shutdown.
Yeah. Especially after we saw that rebound and that surge higher for Treasury yields, given the positioning ahead of a Trump presidency, right? So where do you expect Treasuries to go in 2025 if this continues? I know that it's very hard to have visibility, but given the Fed's trajectory, how do you position in Treasuries?
Right. The Fed's move 2 days ago, I think that the one thing that we all can agree on it is that they did sound hawkish. They've shifted their dot plots. A lot of focus is actually really on the inflation bit of it, where their inflation forecast came in much stronger, and that's really because they are starting to kind of incorporate Trump's policies going forward. Now, if we, again, coming back to my earlier statement where I was, talking about where global bond yields could actually be, we do feel that the global economy could have some momentum going forward, just due to the fact that this year we have had major central banks cutting rates. The Fed was still cutting 2 days ago, despite financial conditions, still very, very loose. And the ECB is cutting. Perhaps next year the BOE will cut as well. So what we suspect is that global growth going into next year, credit conditions are actually loosening. So we are getting that momentum in global growth, which means that global bond yields could actually be going higher, and we have started to see that. So the range is actually going to be higher from here. And, obviously at this point, because of positioning, everyone is just very short bonds. We could actually get a rally in bonds, but thereafter, what we suspect is that global bond yields could continue to go up. Of course, there's a lot of uncertainty, though, because of Trump's policies going forward. So we need to be very watchful, actually, over Trump's policies going forward. Yeah.
So will some of these emerging markets be able to move? Because we have the Philippine Central Bank cutting. They are saying now that they're open to rate cuts in 2025. At the same time, given the FX situation and the pressure on their currencies, could this limit more moves from global central banks?
Yeah, that's a very good question, Jerry. I think, what we have already started to see over the past quarter, since U.S. bond yields bottom after the Fed cut in September by 50 bips, we have had a couple of central banks all coming out to actually sound less dovish. So, for example, the Hungarian Central Bank was one of the very first few to start to say that, we probably cannot cut as much or not even cut simply because FX stability is, an important function. Now, if we come back into the Asia space, I think in the Indonesian Central Bank, the BI, is especially one of those central banks who they take into consideration FX stability very much. And I think in the last, just 2 days ago as well, the BI came out to say, and they have been intervening as well in the FX, simply because, and they are simply less dovish, simply because they cannot afford to cut rates anymore from here. It's very unlikely that they will cut or even, maybe just cut once, but it's very suspect that they can even cut any rates at all.
Just in the past hour, BI came out and said that they will guard the rupiah boldly in order to build market confidence, right? Why isn't the Bank of Japan focusing more on the weakness of the Japanese yen? I mean, we even got inflation data surprising to the upside today.
Yeah. I think if you rewind back to yesterday, if you heard Governor Ueda's press conference, I think the main point that we all got from his press conference was that he, or rather the BOJ, was more concerned about the policies coming out of Trump, that whole uncertainty over U.S. policy from here. It didn't seem like it was about Japan's domestic conditions at all. I mean, you're right. I mean, today's CPI was, is showing that inflation is accelerating again. I mean, you are getting like wage growth growing at its fastest pace in 35 years, right? So it really gives the signal that the BOJ should be raising policy rates. I think where the BOJ fell short on yesterday was not the fact that they didn't raise rates yesterday. I think that was pretty clear that, they would have waited just 1 month more kind of thing. But it was the fact that they didn't kind of show any inclination at all in terms of wanting to raise rates, even in January. And now everyone has started to push it back. And so, it's very easy that the yen can reach 160 from here, simply because there's no policy support. Of course, the MOF is coming in now to kind of step back and kind of intervene a little. But what we really need is a bit more of a hawkish tone out of the BOJ.
Yeah, Carol Lye, good to have you with us, portfolio manager and senior research analyst at Brandywine Global. And coming up ahead, we'll be speaking with Societe Generale on Beijing's bid to revive its struggling economy. That's next. This is Bloomberg. Chinese President Xi Jinping speaking last hour in Macau at the inauguration ceremony for the new administration. For more, our China correspondent Minmin Lo joins us now from Macau. Minmin, so what stood out to you from Xi's remarks?
Yeah, well, President Xi's speech didn't give us anything very groundbreaking. He repeated the themes from his past speeches, really emphasizing the strength of the one country, two systems. He talked about all the progress and development that Macau has seen over the past few years, including the leaps it's made in terms of medical services, social security, the development of cultural tourism, and the healthy development of the gaming sector, and as well how it's a model of stability and social harmony. And he says this is proof that the one country, two systems really works. Have a listen.
Since Macau's return to motherland, Macau has accomplished great achievement, and that shows the world that one country, two systems has got its advantages and vitality. One country, two system principle is a good principle that protects and maintains the long-term prosperity and stability of Hong Kong and Macau.
And President Xi mentioned Hong Kong several times alongside Macau as well. And it's clear that this trip is an extremely symbolically significant one for President Xi to show to the world that territories like Macau, like Hong Kong, are clearly under China's sovereignty. They are territories that shouldn't be meddled with by other external third parties. They are considered China's internal affairs.
And Min, of course, we do have a new chief executive in Macau. What are we expecting for him to focus on going forward?
Yes, the new chief executive, Sam Ho-Fai, he is a man of many firsts. He is the first to not be born in Macau, the first to not come from a business background. He is a former judge, and just now during the inauguration ceremony, he spoke a little bit about his vision for the city to continue the efforts to further integrate Macau into the Greater Bay Area, into the national strategy of the development of mainland China as well. And we know that the city has been trying to diversify its economy. It's incredibly reliant on the casino and gambling sector for its tax revenue. In fact, 80% of its tax revenue comes from the gambling sector. And the chief executive has warned against these the wild and barbaric expansion of the gaming sector. He had vowed to tackle issues related to people's livelihoods, provide more support for young people, for small and medium-sized businesses. And judging from President Xi's itinerary, he revisited a lab for traditional Chinese medicine and a space technology lab in a university. That suggests that these are new priorities for the city to really diversify into not just a tourism hub, but into traditional Chinese medicine, into commerce and tech, and to turn the city into an international destination for conferences and events as well.
Bloomberg China correspondent Min Lo there joining us from Macau. And of course, this is one region that has been hit by slowing demand in China, slowing visitors from the mainland. But take a look right now at the expectations of more easing for the Chinese economy in order to support demand there. We have seen the one-year yield in China falling for the first time to 1% since 2009. We haven't reached this milestone since the global financial crisis, and really reflecting expectations of more interest rate cuts next year in order to support the struggling economy. We have seen the 1-year, 5-year loan prime rates today being kept unchanged, but most analysts thinking this is just a pause in a downward shift in borrowing costs. Our next guest thinks that the recovery in domestic demand in China is still sluggish. Joining us now is Michelle Lam, Greater China economist from Societe Generale from Hong Kong. Michelle, great to have you with us. The moves in the bond market, just the expectations of the Chinese economy. A lot of people worried about Beijing really falling into a recession. What do you think?
I think the risk is still there, but very gladly we have the policy pivot starting to shift the priorities, focusing more on consumption and stabilizing the housing market. But of course, judging from the November data, there's still a lot more work to be done. And investors are really waiting for some bigger push on the fiscal stimulus, on the boosting consumption and stabilizing the housing in the next in the March MPC next year. So I would say that the jury is still out whether China can really escape from the debt deflation trap.
What have you seen in terms of corporate activity? What's really interesting was that I was just having a chat with my colleague, and he was telling me that these cargo ships were completely loaded because China was sort of front-loading a lot of the manufacturing goods and exports and imports just in case that there could be tariffs. So are we seeing more activity behind the scenes than what the data is showing right now?
I think that's definitely the case. For example, if you look at the November export data, actually we are seeing more resilience for shipments to the US as opposed to other countries. And for exports to the Asian bloc, it also remained pretty strong. And we know that actually a lot of the intermediate goods are being exported from China to the bloc and eventually channeled back to the US. So we are definitely seeing some strength in terms of the export front-loading. And I think these activities will continue to be ramped up up over the coming months, especially like we see news reporting that some U.S. companies like Microsoft, Dell, they are already having some plans in case of a tariff hit from the U.S. So we're definitely seeing some minor boost in terms of the export activity, I think, in the very short term.
We've heard a lot of rhetoric on supporting the property market. What have we seen in the housing sector?
Actually, there's some positive signs of the housing sector in the top tier cities. I think it's quite clear. You look at the November property sales, and the year-on-year basis has returned to positive territory. And in terms of the National Bureau statistics, the house prices, they are also falling at a slower pace. But of course, a lot of these are really driven by the first tier cities. And I think the question is still out there of whether we can see a sustained improvement, because you can argue that a lot of the improvement was actually driven by the relaxation of purchase restrictions being announced in September. So there's a lot of pent-up demand, and that supported people. Maybe they are thinking about upgrading the houses and replace the old ones. So that's driving a lot of the sales in the last 2 months. So whether that can sustain, I think there's still a question. It will really depends on the confidence of whether the stimulus package can really revive people's sentiment. And I think more importantly is about the income expectations for the future, because right now I think you look at the excess savings in China is still remain at very high levels, and people, if they are uncertain about the future, and how could they be comfortable in landing their foot on the housing ladder? So I think that is still a big challenge. But I think on the other hand, if you talk about the valuation perspective, I think you look at the rental yields in the first tier cities is around 2%. And with the recent fall in the Chinese interest bond rates and the deposit rates, I think from an investment perspective, maybe the valuation rise is starting to look okay, which means that maybe we won't see another massive correction in the prices at least.
So why didn't we see another move in the loan prime rates this week? I mean, was it a consideration of also the pressure on the yuan?
I think it's just a matter of time. I think we will still likely get pretty big interest rate cuts for 2025. And I think between now till the end of the year, we're going to get some triple R cuts. So the PBOC may be thinking that, well, they're already massive rally in the bond market, so maybe they can hold a little bit and wait for next year and see. But I think, well, given the strong signal that they already upgraded the stance from prudent to moderately loose, I think it is quite likely that there will be notable interest rate cuts throughout the course of 2025, and that is a positive change. It will be supportive of the economy.
Michelle Lam, good to have you with us, Greater China economist at Societe Generale, as we continue to watch, of course, the offshore yuan, which has fallen to new lows, but we have seen a little bit of support coming from the PBOC measures as well. We had seen really that higher fixing in the previous session, and that leading to some support right now unchanged at that 730 level as we continue to see the dollar hovering around its 2022 highs. The Japanese yen also strengthening a little bit. We had some comments coming from the finance minister Konto about how gravely concerned authorities are about the FX moves. Still ahead, the Philippine Central Bank governor tells us exclusively that BSP is open to a rate cut in its first policy meeting next year. This is Bloomberg. Welcome back. You're watching Insight. We're really looking ahead to that Fed's preferred inflation gauge. That renewed focus on prices likely to keep Asian stocks under pressure into the end of the year. Though analysts see solid gains for the region's benchmarks in 2025, that's including here in Japan. Avril Hong has more on that. Avril.
Yeah, Sherry, we're seeing Asia's stock gauge on its longest losing streak since April, really failing to shrug off that Fed-induced sell-off. And it's the concerns about higher U.S. yields, stronger dollar, how Asia's central banks probably can't cut as aggressively now that are weighing into Asia's stocks into the end of the year. But you look at the region's benchmark, it's still sitting at about 6% gains for 2024. And at least based on some metrics, based on analyst bottom-up 12-month targets, they see pretty solid gains for China, South Korea, Taiwan benchmarks, and also in Japan potentially. So this is building potentially on the gains of the Nikkei, the topics that have already climbed about 15-16% so far this year. Now we're back from the lunch break in Japan, so let's take a look at how we're faring in the afternoon session, because today we've seen how the cheap yen is really the story, following dovish Ueda. The finance chief, as you well know, Sherry, has managed to talk back some of the yen weakness, but we're still about 2% weaker than just before the hawkish Federal Reserve. So that cheap yen is helping the automakers, the steel producers, and the Japanese gauges to kind of buck the trend in the region. What's really dragging the indices down today is the Japanese banks, Sherry.
Thanks for that, Ava. For a closer look at Japanese stocks, let's bring in our Japan stocks reporter, Alice French, here in the Tokyo studio with me. And Alice, we have seen Japanese stocks come back down a little bit from those highs that we saw in the summer. How did the BOJ play into these huge gains still for the year?
Yeah, so we see both the Nikkei and the Topix up over 15% year to date, which is pretty good, like you say, despite that rout that we saw in August. And usually, you know, one would expect the BOJ hiking rates to actually have downward pressure on the market, right? Because it kind of pressures companies' earnings as borrowing costs rise. But we've actually seen banks and insurers really driving these gains this year, as it's a positive for them, obviously, if interest rates are higher. So, you know, banks have been up over 40% this year, insurers up over 50%, the leaders on the Topix and also among the top performers on the Nikkei too. Now, you know, interestingly, obviously the BOJ decided not to hike rates yesterday, which was widely expected, and we're seeing banks down quite a lot today, which again is not really a surprise, but the market does expect there to be further rates in 2025. And so this kind of ongoing trend of monetary policy normalization is seen supporting those gains into next year as well.
And if you talk to analysts, it's not just the BOJ factor here. It's just a greater optimism when it comes to more activist investors, more just corporate fundamental changes that are happening in boardrooms.
Definitely. So we have seen this year these kind of moves amongst a lot of companies to improve capital efficiency. This is under pressure from the Tokyo Stock Exchange and the government to improve corporate reform. And analysts and investors too, particularly foreign funds, are seeing that being an upside moving into next year. We've seen a record number of activist investments in 2024, over 140, which is exciting. Those kind of activists, but also just ordinary foreign investors, they see more opportunity to kind of unlock further value. A lot of Japanese companies still trading below book value, and so there are a lot of chances to really make some good gains next year as we see this expanding. Also in terms of IPOs as well, which is being driven as well by this rise in M&A that we've seen this year. There's been a lot of high-profile M&A moves, including, of course, 7&I. That's really driving sort of focus and interest on Japan's market, and also offers activists, you know, potential ways out, exits of those investments, which again is kind of lowering the risk for those activist investments and really making opportunities higher.
I wonder how big the risk is the weak Japanese yen. I mean, you're thinking, okay, it might help exporters, but when we talk to CEOs, they don't like the pace and the volatility at which this weakness is coming through.
Absolutely. I mean, the yen is always going to be a major factor for Japan's market. And, you know, like you say, particularly for exporters, a weak yen does tend to support shares. But it is a risk. It is very volatile. You know, there's talks kind of swirling around of potential government intervention and things like that if it keeps tanking, particularly obviously in the context of what the Fed is doing in the US and the fact that we expect to maybe see an even stronger dollar moving into 2025. So definitely that is one. The yen is one source of uncertainty amongst both analysts and investors as we go into next year. But the general consensus seems to be that if the yen keeps weakening, it may have positive impact on the overall market. Having said that, interestingly, we have seen this year the continuation of a trend that's been happening over the last couple of years, which is kind of a weakening of the connection between the yen and Japanese stocks. So usually it would be very easy to say, oh, when the yen weakens, exporters will get stronger and the market will go up. It's actually not always the case now. It's become more complex. And investors are looking at the BOJ's decisions more closely, and obviously the BOJ is also kind of basing a lot of their decisions on the yen, is what's assumed. So it'll be very interesting to see how the relationship between the yen and stocks plays out in 2025.
Our Japan stock reporter Alice French here with a look ahead also to 2025. So we're expecting a lot of excitement in the Japanese markets. We're seeing a lot of excitement in the Philippine market as well. We are now seeing the peso potentially headed for the best best gain in over a week right now. We are seeing the Philippine peso strengthen a little bit, and also the Philippine stock index rising more than 1%. Of course, Bloomberg has spoken to the Philippine Central Bank governor, and he told us that he's open to delivering another rate cut in his first monetary policy meeting next year. This is, of course, after already delivering a rate cut this week. Let's actually hear more from that exclusive interview earlier with the Philippine Central Bank governor, Eli Remolona.
Looking at all the data, what we've decided is that we more or less stay in the same trajectory. So as you know, it's really two decisions. It's a decision on the policy rate, and then it's a decision on the trajectory. We decided to ease on the policy rate, but it's more or less going to be on the same trajectory as before.
Okay, I'd like to clarify that, because when you say same trajectory, you've cut rates, correct me if I'm wrong, 3 straight times. So we get 3 straight times next year, just to clarify that on the policy rate.
Well, it's not the trajectory of the last few months. It's a trajectory that we've described in our forward guidance. So it's a trajectory going forward, and we haven't really changed that.
Understood. How restrictive do you think policy rate is currently?
It's one of the things we look at very closely. I think we're still somewhat restrictive. This is because we've been easing in baby steps, and that's on purpose, so that we can buy insurance against a possible rise in inflation, especially a rise that's unexpected.
Understood. And Governor, would you say, given that inflation, I guess to your point, upside risk is the problem more than the opposite,
yes.
Would it be accurate to describe the central bank's attitude towards easing as more cautious than the other way around?
You mean less dovish than
Would you
before?
Be leaning more toward? Yes. Would you be leaning more towards less hikes than more hikes, more cuts rather?
We're leaning towards more cuts than additional cuts. I wouldn't say more cuts than we were leaning to before, but we're leaning towards additional cuts in 2025.
Governor, can you compare the outlook for easing at the BSP versus the Fed? Because, of course, there were shocks this week when we saw fewer cuts being foreshadowed by Fed officials.
Yeah, for the Fed, the statement as well as the press conference suggested that they're less dovish than before. We ourselves are neither more dovish nor less dovish. We're still on the same trajectory as before.
Understood. And I mean, if all goes to plan, no nasty surprises on inflation and otherwise, can we treat your first meeting next year as a live one in terms of would you be open to a cut at the first meeting next year?
Yes, we would be open to a cut, given the data, of course.
Philippine Central Bank Governor Eli Remolona speaking exclusively with Bloomberg there. Let's now turn to some geopolitical stories that we're following as well. The Philippine Vice President, Sara Duterte, is facing a third impeachment complaint, this time from a group which includes clergy members and lawyers who allege she violated the Constitution and betrayed public trust. Duterte faces separate impeachment moves and an investigation over her apparent threat against President Ferdinand Marcos Jr. Argentina is seeking a new program with International Monetary Fund to replace its current $44 billion deal. The IMF had earlier lauded President Javier Milei's government for cutting spending and cooling inflation. If an agreement is reached, it would mark Argentina's 23rd program with the IMF since 1958. Bloomberg has learned Canadian Prime Minister Justin Trudeau will shuffle his cabinet on Friday. It comes after the surprise resignation of his former finance minister, Chrystia Freeland, earlier this week. A government official says Dominic LeBlanc, who was sworn in as finance minister after Freeland quit, will remain in the role. Still ahead, we speak with the CEO of drug maker Inchos Glenmark Innovation on the firm's IPO outlook and competition with Chinese biotech companies. That interview's next. This is Bloomberg. Take a look at how we're setting up for the India market opens. Of course, we had seen significant pressure on the equity markets as the rupee also hit that record low after the U.S. Indicated fewer rate cuts in 2025. The rupee now breaking that 85 per dollar level, and we're really focusing on potential RBI FX interventions under the new governor, Sanjay Malhotra, as well. Today, we're also watching some software stocks. They could follow a global peer Accenture higher after the U.S. company raised their revenue forecast for the full year. So do watch out for, say, Tata Consultancy Services, Infosys, and others. We're also watching Indian drug makers. They rallied yesterday with the weak rupee seen benefiting the export-heavy sector. Glenmark Pharma is one of them. The stock has tripled in the past 2 years amid the Indian stock market boom. The firm is also seeing positive signs from a blood cancer drug trial last week. Joining us now exclusively is Cyril Konto, President and CEO at Inchos Glenmark Innovation from Lausanne, Switzerland. Great to have you with us. Thank you so much for your time. Does your company also get that benefit that investors think drug makers will be getting when it comes to the weak rupee?
Happy investor, happy biotech company. We're a small clinical stage biotech company developing technologies in oncology. Those technologies are tri-specific. They're a new class of drugs, and obviously with bringing clinical results like those we presented at the prestigious American Society of Hematology annual meeting last Monday, we are gaining further tractions from our investor, Glenmark Pharmaceutical, for developing new drugs and bringing, hopefully, new technologies for solid tumor after this first trial in blood cancer, as you mentioned.
How does all of this set you up for a potential IPO?
So at the moment, we're private. It's easy for us to navigate. We have a plan to become IPO, but we're first focused on the development of ISB 2001, a tri-specific targeting 3 antigens for myeloma patients. Myeloma is a devastating blood cancer. And with the first results of ISB 2001 showing high tumor shrinkage up to complete remission in 22% of the patients we treated so far, that gives us a lot of work. We're hopeful that we can partner this asset in 2025, and we will focus on the IPO later on.
The myeloma landscape, though, is a very competitive one, right? So what makes your company different and gives it a competitive edge against other drug makers?
Sure, you have a point. Indeed, myeloma has been investigated by the big pharma players, Janssen, Pfizer, for quoting one of the biggest ones. We feel that we're bringing this new drug class that enables to overcome mechanism of resistance developed by the myeloma cells. And this is really the key differentiator from our standpoint. And this new technology also translates into outstanding results in patients who are relapsing after innovative therapies like bispecifics or even CAR T-cell therapies.
So is this a trispecific antibodies that you're talking about then?
Yes, trispecific because we have developed this antibody that can bind to 3 different targets, 2 on the myeloma cells and 1 on the immune cells, bringing immune cells next to myeloma cells to eliminate the tumor cells. And that is a powerful immune system that every patient carry in, protecting them from foreign bodies. So we are leveraging what Mother Nature has put in place and directing immune cells against the cancer.
You mentioned earlier big pharma companies. Are you exploring any licensing or any co-development deals at this point?
Given the nature of the results, they praised for accelerating the development of ISB 2001, where only 150 scientists across 3 locations, New York, Switzerland, and India. We need the help of big pharmas to accelerate this development worldwide. So this year, indeed, we will explore opportunities to license ISB 2001 to a big pharma that can enable this acceleration in multiple regions, and at the same time help us bring some cash in IGI to develop our next technology for solid tumor.
What sort of partner are you looking for?
So for us, it will be simpler to do a licensing agreement. A licensing agreement will enable the partner to get the rights of IGI for most of the world, and at the same time help us in negotiating with the regulatory authority to see whether the way we perceive the results are the actual way enabling breakthrough therapy designation at the regulatory authority like the FDA or PRIME in Europe, or even Sakigake with PMDA in Japan. So licensing agreement is really the deal we're looking for in 2025, with significant upfront payment ideally to enable the operations for next programs.
Chinese biotech companies seem to be inking deals these days with big pharma as well. How big competitors are they to you?
They are competitors. I think at the end, it all goes down to the innovation and to the translation into clinical results for patients. The results we presented on the podium at the ASH annual meeting have been described as outstanding by the expert in the field. So we're hopeful that the deal for ISB 2001 will be in the same range than the deal recently announced with Chinese biotechs.
Given the landscape right now, does that affect any conversations, valuations that you're having with partners?
No, because we are at the initiation of those discussions. I think the starting point was really the presentation of the preliminary clinical results. On our hand, we continue to enroll patients into our phase 1 study so that we can define a dose at the end of next year and hopefully start our first registrational trial for ISB 2001 in patients with relapsed refractory multiple myeloma.
When it comes to the broader Indian drug market, I want your views about what the landscape is, especially when we have seen some concerns about safety, several recalls globally as well. How do you improve the credibility of really goods that are manufactured, that are created, and that R&D is happening in India?
I'll be honest, the small doctor and scientist I am doesn't have all the clues of the Indian market. I am privileged to partner with Glenmark Pharmaceuticals, with which we're sharing the same vision of bringing innovative therapies, hopefully breakthrough therapies to patients for unmet medical needs. We are building backwards, identifying this unmet medical need, designing the right molecules to address the unmet medical needs, starting with blood cancer, with multiple myeloma, and soon different cancer indication in solid tumors. Aside of that, I'm barely an expert of Indian market.
So tell us a little bit more about your IPO aspirations. I know that you're focusing on your business right now, but I do wonder if you were to list eventually, what markets were you looking at?
Thank you for the question. So indeed, the IPO is on our plan. Unlike most of the biotech company, our private status and privileged relationship with Glenmark Pharmaceuticals is protecting us from an immediate need for an IPO. Despite that, we were closely monitor the IPO market and seize any opportunities. If we can strike a deal, a licensing agreement for ISB 2001, our need for an IPO will be lower, but still monitoring the opportunities of the market could enable additional cash for our operations, cash runways, I mean. In terms of market itself, we're headquartered in New York, and we will look into an IPO most likely at NASDAQ.
Given the success of the trials in phase 1, what are your expectations in terms of revenues that you're expecting to generate from the blood cancer drug?
So it is an important question. If you think of multiple myeloma forecast, today the market is, speaking in numbers, $23.5 billion. It is expected to rise up to $30 billion in 2030, given the increased incidence of multiple myeloma with the aging population. So I'd say the opportunity is big. We will obviously start in the relapse refractory setting, but will leapfrog the other approved therapeutics to move to frontline as quickly as possible. Ourselves in our lab in Switzerland are exploring opportunities for combining ISB 2001 with already approved therapeutics in multiple myeloma to enable this fast move to frontline multiple myeloma.
Cyril Konto, really good to have you with us. Thank you so much, President and Chief Executive Officer at Ichnos Glenmark Innovation. Take a look at how India markets are trading right now. We talked about pressure, given, of course, the recent developments on central bank monetary policy around the world. But we're seeing the Sensex now falling 0.2%. And, of course, that incredible weakness on the rupee continuing past that 85 per dollar level. Do keep an eye on some of those software stocks. We did see some positive results from Accenture, their global peers. So we will be watching the likes of Tata Consultancy, Infosys, and Tech Mahindra, as well as some of those exporters, given the weakness of the rupee right now. India, of course, has had a lot of activity recently, breaking through about $19 billion raised since January when it comes to IPOs this year, and perhaps a reflection of the broader picture across Asia as well, where we're seeing really a surge in activity as well for 2024. And of course, we'll be looking ahead to 2025 as well, as we have the MSCI Asia Pacific right now down 0.3%. The Nikkei holding steady. Next week on Insight, Silverdale Bond Fund's founder and CIO Sanjay Guglani will be with us to give us his market strategy for the coming year. This is Bloomberg.